We're going to try that again. Sorry about that. Anyway, welcome to the Financial Thing Friday edition of the live stream. Apologies for not being here on Thursday. Thursday was a American holiday, of course, of the big holiday of Thanksgiving, which was really just an excuse for Americans to get together and indulge and gorge themselves in a variety of different dishes, including such weird things that I don't understand, like sweet potato casserole that has marshmallows in it, and green bean casserole that has crunchy onions in it. You know, it's an American thing. They love to do it. Thanksgiving holiday, of course. Celebration of the pilgrims coming over to the USA from many places like Great Britain and Europe. But anyway, yeah, so anyway, that is why I was not here on Thursday, but we're here right now, and that's what's important. So welcome to everybody. Hope you're having a great week. We're going to talk about a few different things today. We're going to take a look at the Landy administration update. If you're an investor in Landy, I'm sure that's of somewhat significance to you. We're going to talk about the... Oh, you're saying no sound. Okay. Hopefully you can hear now. Let me know if you can hear me now. I think I have my mic muted for a little bit, so hopefully it should be fixed now. Because you are on a bit of a delay to me of what you can hear versus what I can hear. But yeah, I had the mic muted, but it should be good now. No, I'm not hungover. Does it seem like I'm a bit hungover? I'm a bit tired. I'm a bit flustered. I don't know why today, but anyway, if you're watching this in the future, please subscribe, hit the thumbs up button. And don't forget, next Thursday, we're going to have Narinder Kaur here from Cufflink CEO, of course. And they are proud sponsors of the Financial Thing YouTube live stream and the Harley Cam, which she has decided not to appear today. But thank you to Cufflink. You can earn up to 9.83% gross per annum, over £250 million of property-backed UK investments. That's close to 300 million now. Has been made since 2016. Zero investors' losses to date. Capital is at risk. Don't invest unless you're prepared to lose money. This rate can change as interest rates change. Sign up at join.cufflink.com/financial-thing. Anyway, we are going to talk about a couple of peer-to-peer lending pieces of news. We're going to talk about the HM government, Her Majesty's government's release of the autumn statement, which is going to see some ISA changes, which will affect you too if you are an ISA investor. So we're going to run through those, show you what's changing. We are going to take a look at the Trading 212 portfolio because today I added 2 new positions to the portfolio, and I'll explain what those are and my thinking behind it, because I haven't made any real changes to the portfolio, which has been really stagnant recently. It's just kind of been going up and down like a bit of a wave. And so I added a couple of new positions, and then we're going to talk about some cryptocurrency things that are very, very interesting. And again, you know, even if you're not a cryptocurrency fan, you should always be looking at opportunities that are out there for investments. And I think there's a pretty big one coming. I'm 90% sure. Don't quote me on that. And of course, not financial advice, but there's a big one coming down the pipe, and you should definitely pay attention to it. Anyway, thank you to everybody for joining. We're going to get right into it. I'm going to try to keep this one short today as it is a holiday here, and I'm going to try to do a little bit of holidaying myself. So let's get right into it. Here we go. This is the Landy restructuring letter that was sent out. This is an update RSM has sent out. They tend to send these out, you know, whenever they really have things that are pertinent information. Most importantly on here, they are distributing on the M2 loans, which is a classification of loans within Landy that are under administration. There has been money that has been recouped, albeit not huge amounts. But if you are a lending investor, you do need to check in. Get into your account, take a look, see if there's any money in there, because there is a lot of money that has been left in Lendy, which people are obviously should be getting, and it's just sat in their account. So if we look at this on the update, there are 5,085 investors as of this publication on November 22nd who have available funds in their platform totaling 1.213 million pounds, some of which 1,322 have failed verification and that they're unable to access funds. So about just over £500,000 sitting in there from people that have not been able to go through the anti-money laundering verifications that you must go through to get your money out of Lendy. So definitely go ahead and do that. A total again of 1.2, so 1,213,000 and some change just sitting there. Some people just haven't linked up their bank accounts and able to withdraw, and that's 626 people, 161,000 people with no, 161,000 pounds of no bank account linked money, so that money cannot come out of there. And you've got 3,137 investors and just under 500 grand of people that, money that they could just withdraw and they just haven't logged into their account to go ahead and pull that money out. So please, if you are an investor and you haven't logged in for a while, go ahead and log in, get that money out of there as quick as you can. You definitely want to get back anything you can out of that. And it does say that you can contact support at lendy.co.uk if you need further documentation to go through that anti-money laundering process through the verification. So go ahead and do that. I know I don't really log in anymore. It's kind of just an afterthought. I see it as a bit of lost money in a way, so sometimes I just don't want to go in there and log in, but please do that. Go ahead and get your money. If you are looking at Easy Money, the company, and you want to invest, they did a really interesting study that shows, and Peer-to-Peer Finance News, which has been renamed to the Alternative Credit Investor, put out a story on this showing where you could find the best yields on buy-to-let portfolio. And I think what this story is really saying is it is better to invest in some ways in peer-to-peer lending, where the peer-to-peer lending companies have the collateral of real estate, because you're going to get better yields in some ways from, say, Easy Money or a company like LoanPad than you are actually buying the buy-to-let property in a portfolio. Of course, there are some, monetary things that would stop somebody from owning a portfolio of properties. But it was a really interesting study because it shows that there's currently 884 portfolios of buy-to-let properties for sale in the UK, averaging about 1.2 million each and only offering an average yield of 3.4% on average. So if you were to buy a portfolio with giving you an average rate of multiple properties, you could expect to get about 3.4%. And I believe that's gross too, so that doesn't put into consideration taxes or management fees, repairs. What a lot of buy-to-let people are doing nowadays is just hoping that the properties go up in appreciation in the future, while the yields stay relatively low, which is, generally in the UK, property has tended to risen, but we have seen periods of time where the price of real estate in the UK has actually gone negative sideways. And then, you can have landlording issues such as tenants not paying, or if a boiler breaks, that's £3,000. It's a lot of rent if you're only getting £900, £1,000 a month. So that's 3 months of your rent gone down the tubes, and then you got to pay the management fee of 8 to 10%. So in some cases, it is just easier to invest through a company that is purchasing those buy-to-let properties or lending on real estate and buy-to-let through companies like LoanPad, Easy Money, and actually being able to yield much higher than the average 3.4% on a buy-to-let portfolio. Now, what the study also says is to see if you go to certain parts of the north, like in Yorkshire or my home county of Humber, which in the Humber side you're going to get a better yield. In places like that, you can get around 6.1% on a yield of a portfolio of properties up there. But if you go down to places like London, you could probably only expect something in the range of about 2%. East Midlands about 5.7%. So, really obviously depends on where you buy. You can see here with an average portfolio size of 4.9 bedrooms, that means if you were to buy a portfolio of multiple properties, smallest of all regions, the expected yield is just 2.1%. And that's London. So you're just not going to get a great yield. So, I think something like Easy Money or LoanPad is a really good alternative to actually, if you had some way to buy a portfolio of properties, considering the yields right now. Maybe the property prices go down, rents continue to go upwards. You're going to see those percentages get a little more attractive, but that's why we look to places like LoanPad or Easy Money to get that kind of diversification and exposure into property investing. Let's see what else we got here. This is interesting. So Fourth Way, who is an analysis website, which I'm sure all of you have seen and read some of the reports they have. They go way in depth about what they do is they're pretty much paid by the peer-to-peer lending companies to produce this information. So we'd hope the information is accurate and transparent, which I believe it is. I think Fourth Way is a upstanding website. But they have ranked SOMO, which is a bridging lender, number one for financial help. They're saying that SOMO has outweighed its debts by 7.21 million. It means they have over 5 million in cash. They've had very good financial results and zero losses, capital losses to date for investors. They have traded profitably since 2014. I've actually reached out to SOMO a couple of times. I think Lewis Alexander is the guy's name. Try to get him on the stream. Just haven't been able to sort that out yet. But SOMO is one, honestly, company that's not really been on my radar at all in the peer-to-peer world that possibly should be. But also, Fourth Way ranks Folk to Folk, who we've had on the stream, and Cufflink is relatively high when it comes to financial strength. In fact, those three companies make up the top three of Fourth Way. You've got SOMO, Folk to Folk, then Cufflink. So definitely, if you are a SOMO investor, let me know what your experiences have been, because again, I don't really have much experience with SOMO. It's not a company that I actually invested through. We had also an update of Funding Secure, which is CG and Co. Administrative Progress Report. Of course, we see another extension here of the administration of Funding Secure, which has now been extended until the 22nd of October 2024. I think, again, this will continue to go much longer than that. These things tend to get extended out 1 year to 1 year to 1 year. And the reason is they just have so many loans that have been still open and that they're still trying to collect on, that you just don't really see this being wrapped up by the 22nd of October. I mean, that's less than a year from now. Some interesting, of course, it's always good to go through and see, how the loan situation is right now. So this is during the period of 23rd of April 2023 to the 22nd of October 2023, so 6 months. And they have had a realization, which is good. Not a spiritual realization, but a monetarily one. And you can see here, if I zoom in, 3.10. During the period, total gross loan realizations amount to 2.169 million, so 2.1 million and about 70,000. That's during the 6 months. They've managed to retrieve on the realizations of loans in the total time they've been doing this administration now, which is several years, so 48.75 million pounds. They've had 3 loans that have completed. And one interesting thing I've noticed about Funding Secure is they've had some issues, I think, legal issues and also the court, the way things have happened, where they've frozen a certain amount of funds. So if you have money in your account, you may see some of it's frozen. They're trying to work through that to actually get those funds released. Mark Mason probably can explain more about that. He's one of the stream watchers. But also go to the Funding Secure Action group on Facebook, and you'll get all the latest news about what's going on with the administration there. But you can see here it says currently there are 30 remaining defaulted loans with a capital of 19.1 million. The joint administrators are continuing to realize each loan, and they're unable to provide timescales for when of these remaining loans will be realized. The quarterly updates will provide further information, so you should continue to monitor that. During the period, investors withdrew 6.25 million from the platform. Of course, as money comes into the platform, people withdraw. And then total withdrawals over the entire administration has been £30.67 million. They're also getting bank interest, which is good. So any money that they've been holding in the bank accounts, they've gotten £145,900 of interest. So anything helps to kind of pad these administrative fees that tend to eat up quite a lot of any of the realizations that come in from the loans. So they are getting some gross interest. Let's see what else. I know there is a charge on here from a floating charge for Mr. Kumar. So here you can see Rajinder Kumar, and he was one of the company founders from back in 2000, predating 2018. I think maybe in 2018. That's 1.594 million. But they haven't made any payments out to this floating charge yet. And there is another floating charge for 1.2 million for Easy Invest Limited. So those have to be sorted out. They've also got unsecured creditors, 20 creditors, 762,000 from claims. I'm thinking anybody unsecured is not going to get anything back, unfortunately, just because of the lack of money being brought in. And I would imagine there'll be some losses to them, unfortunately. Let's see. Here's the real numbers down here. Yeah, the fees always seem to continue to rack up. Unfortunately, you've got a £260,000 consultant's fee. Don't really know what that's for. You have fees, obviously, for the insolvency legal costs, 1.24 million. I think that these are totals. Oh no, that's for the year. 2310. I don't think these dates are correct. I should probably say. Oh no, I'm sorry. Yeah, okay. Now, these dates are weird. I'm not really sure why it says 2310, 2023, 2210, 2023. I would imagine that's supposed to be a different year on the end of that. Yeah, here you go. So 2019. So they've mistyped that in. 29. So this should say 23rd of October 2019 down up here, and then this is correct. So you're talking about over a period of 4 years, fees of substantial amounts. So let's look at that. Where is it? Receivership, insolvency, legal costs right here. 1.24 million, and then receiver costs. So this will be CG and Co. 3.4 million. So that's 4.6. So 4.7 million just in those two lines of charges. So the administration just really eats up a lot of the fees when it comes to recoveries in these situations. And then you've got irrecoverable VAT here, VAT, value added tax, at 1.2 million. So a lot of fees being generated by the administrator. And, imagine if this thing continues to go on for another 2-3 years, you're just going to see those fees continuing to go north. And that's just something we have to really just accept. And thankfully, the Financial Action Group, which FSAG has, I think they've been to 13 different meetings, the committee members, to really represent our interests as investors of these default loans through Funding Secure. So thank you to them. They will continue to fight to keep these fees at a really reasonable level, even though I don't know if the word reasonable exists when it comes to administrators, because they seem to rack up the fees. But yeah, I foresee this really dragging on. If I had to take a guess, and you come back, mark this, I reckon you're going to be looking until the end of 2027 before this thing completely gets wrapped up. It's a lot of time. You're talking about 8 years this will have been in administration. I think that's a reasonable time frame. It's very, very, very unfortunate. Let's see here. Let's take a look at the ISA situation. So we had a report that came out. This is called the Autumn Report from the government. And it's got some interesting ISA new rules in here. It's a long report. It's 120 pages. Most importantly, and I think this one was what I was very surprised about, was the annual subscription limits. I thought that it would be time for a change on this. But in the autumn statement, it's saying the adult ISA annual subscription limit is going to remain unchanged through 2025 at £20,000. If we look at the history of these ISA allowances, we started at 7,000 in 1999, and we did not see an increase until 2008, so 10 years later. And then we saw an increase just a couple of years later to 10,000. And then we started to see those increases happening pretty often. So 10,000 to 11,000 in 2012, then to 15,000 in 2014, then to the 20,000 limit in 2017, where it has remained solid. So we're talking about a 5-year now plus another 2 years. So it's going to be 7 years of this ISA allowance has remained frozen at £20,000. If you really think about what's going on with inflation and the economic situation in the UK, you would have thought that that would have been something that would have been increased by now. I was expecting an increase to 22 to 23,000, and that did not happen. So they've gone ahead and frozen it to 20,000 for the 2024-2025 tax year, which is actually very, very disappointing. But it's better than our brethren in the USA. If you look at their ISA equivalent, which is called an IRA, they have only $6,500. You can see how that has not gone up very much since 1974 when it was introduced. So when you look at that, it's actually pretty good if you can get a £20,000 ISA tax-free allowance compared to the USA, which only offers $6,500. So if you complain about the 20 grand, trust me, you've got it pretty good. So now if we look at some of these other things that are very important in this autumn statement, the first one, which I think is really good and very positive, they're going to allow multiple ISA subscriptions of the same type every year from April 2024. So in April of 2024, if you decide you want to open multiple different ISAs of the same type, you can now do that. You just have to make sure that you keep records of where you're opening the ISAs and make sure you don't go over that £20,000 limits. So that's going to be a good thing, because obviously before it was the case where you could only open one ISA of a certain type every single year. So, a lot of people didn't want to put their entire ISA allowance into one place. Now you're able to do that. Going down, you're now going to be allowed to do partial transfers between providers. So the government will allow partial transfers of ISA funds in year between providers from April 2024. So what that means is if you open up an ISA and you decide you want to open up another one the same tax year, you can move part of your funds in between multiple different ISAs of the same year. So example, 2024, you want to open 3 different ones. In first part of the year, you want to keep it all in one place, and you want to move a quarter of it to another ISA provider the same year next year. You're going to be able to do that now. That's really good. You're not going to have to reapply for an existing ISA anymore. So I know if you have an ISA now and you have to actually reapply for that ISA every year, and also for dormant ISAs. So maybe ones that you had money sitting in for a few years that you don't really pay attention to, you still had to in the past apply for those to make sure that you still kept the ISA alive. You don't have to do that anymore. This next one, expanding the innovative finance ISA to include long-term asset funds. I asked a couple of people if they understood what that even meant. Most people didn't, but they're going to allow long-term asset funds. So what long-term asset funds are? They're basically long-term funds that also include open-ended property funds. So the thing about ISAs, you have to hold things in there that are liquid, and they have the ability to be sold within 30 days. And long-term, well, they call it LTAFs, so long-term asset funds were not generally able to be liquidated within 30 days, so they weren't allowed to be inside of an ISA, but that rule is changed now, and that should open up some more opportunities for products to come into the marketplace, because there really, as far as I know, isn't any, or if not, there may be a couple, but it's not really something that's used, so they're trying to expand that sector to allow those into ISAs, so that's a good thing. This is a big one right here, allowing certain fractional share contracts to be permitted inside ISA. What that means is, say, for example, if you use some of the newer web applications now where, even trading 212, for example, if you want to buy a fractional share of, say, Tesla or Apple or Google, some of the expensive stocks, you want to pay £10 and get a fraction of a share. You can hold those now in ISAs, and that's a really big deal, because a lot of people do hold fractional shares but haven't been able to hold them in a tax-free vehicle because they weren't allowed. It does say that certain fractional share contracts, so that's an important word because we don't exactly know what that means yet, but it does say that the government is going to be working with stakeholders on implementation, which means they'll be working with companies like iWeb or Trading 212, places like that allows fractional share purchases. So they'll be working with those companies to implement this. And what I imagine it's going to mean is anything that you would buy through those platforms, you're probably going to be able to hold in the ISA now. We're also digitalizing the ISA reporting system. So that's to support investors, and hopefully in the future they're going to have one place where maybe all of your accounts will connect into this digitalized system. I don't know if that's a good thing or a bad thing, because whether you want all of your information in one place, but it'd be nice to have a place where if you have multiple different ISAs open in 1 year, you knew how much you had of an allowance left, so you didn't oversubscribe and put too much in if you were opening multiple ISA accounts in the same year. So there's going to be a digitalization system. I have a feeling that's going to take a while to implement, and we'll have quite a lot of bugs, but we'll see. Here's the limits. So basically all of the ISA limits going to remain the same, the 20,000 for adults, junior, stuck at frozen £9,000. Lifetime individual savings account $4,000, excluding the government bonus. A child trust fund $9,000. So those are going to be all the same. And they are removing the lifetime allowance now in 2024. This means that we'll clarify the taxation of lump sums and lump sum death benefits, as well as the tax treatment for overseas pensions, transitional arrangements, and reporting requirements. So, pretty interesting stuff, and I didn't really realize this, but looking at some of the numbers on innovative finance, IFISAs, which I thought were actually a lot more popular than they are, but they're very, very, very overlooked. I think if I remember, I saw a chart and there was only 16,000 IFISAs opened up in the last tax year. So it's not really a used vehicle. Of course, anybody that invests in peer-to-peer lending and uses ISAs knows about IFISAs, but if you think 16,000, it's not a huge amount. So I think the government is really trying to promote that vehicle as a way for people to use tax-free monies to open up things like stocks and share ISAs, and realize that that vehicle is not tremendously popular, and they're trying to promote it, which is, I think, a good thing. But yeah, if you want to read the document, you can go to assets.publishing.service.gov UK and find it. There is a ton of information on there. A good bedtime reading will put you to sleep. So yeah, go check that out. Let's take a look at the Trading 212 portfolio. I'll show you what we did today. Bang. We're sitting at 17,286, so we've gone a little bit backwards. We're approaching on 17,500 just a couple of weeks ago, but we've added a position today, two positions. So Coinbase, which is a place where you can go buy cryptocurrency, and I would say is probably now the main legitimate platform for people to go buy crypto. We've seen some issues with a lot of cryptocurrency platforms with what happened with the FTX problem, Sam Bankman-Fried screwing up the entire crypto community. Coinbase, a publicly traded company, and I'll show you exactly why in a minute I decided to add that. We started with a smaller position, which I'm going to add to probably over the next week to get this number up, but it's had a good day today. Let's see, look, 153% increase in the last year. Today we're up about 5.6%. I did get in a little bit late on that today. And then the other one that we've added is Rivian Automotive, which I think this is, everybody when it comes to cars and electric vehicles looks at Tesla. And of course the Tesla stock price being over $230 is a price pretty expensive. They've got some issues, as does Rivian. Rivian is not without its problems. However, partnering with Amazon, I think, is a very strong long-term advantage for Rivian. They do actually have some really good-looking cars, and they're bringing out this SUV in 2024. They've got a pickup truck right now. I think they made about 24,000 vehicles this year. They are operating a loss, but earnings per share has been increasing. I think this is a better valued play than Tesla, personally, and I think it's $16, even though they are operating at a loss right now. I think next year should be actually a breakthrough year for them. So that's the position that has been added to Trading 212. Now, we finally have a little bit of green on Deutsche Bank. Flex Natural Gas has had a difficult year. If we look at the year, down 16%. We got some definite losers in the portfolio, but I continue to hang on. Oil, obviously what's going on in the Middle East, things have been a little weird when it comes to that, but I will definitely be adding to these positions. I think Alibaba might not have been the best buy. Again, not financial advice. Please don't copy me, because obviously I am not a professional when it comes to this. This is just really for educational purposes. But I want to show you a couple of reasons why I think specifically Coinbase is going to be in a position for this share price to really, really explode. Number one, if we look at these numbers, you can see net losses. We're technically in a bear market right now, I think, for the stock market and for cryptocurrency in some areas. Some areas of crypto is doing very well. But you can see these net losses, which is a very important number, has really dropped. So from quarter 3 of 2022, 545 million of net losses. Now, quarter 3 of 2023 down to 2 million of net losses, with, I think, is going to be a profitable quarter 1 of 2024, so the first time of profitability. Also, institutional money, which is where you really make a lot of money if you are a broker of any type of, say, stocks and shares or cryptocurrency. Coinbase does not have any institutional transaction revenue. In fact, they misspell it as transaction revenue, but it's transaction revenue 14.1 for quarter 3 of 2023 versus, I mean, that's 5% of their consumer transactions, right? But this number right here is going to change. And the reason why is because in the US, we are very, very close to the SEC, I believe, approving BlackRock and Fidelity's and Grayscale's and several other companies with this Bitcoin spot ETF, that they have been meeting with the US SEC, Exchange Security Commission, to get this thing through. And trust me, when BlackRock wants to get something through, they're going to get something through. This is a company that has 10 trillion US dollars under management. They are the biggest financial company in the world, and they seem to be very interested in getting this Bitcoin ETF pushed through. So investors all over the world are going to be able to buy exposures to Bitcoin. And what spot ETFs are basically, if investors put in a $10 into this ETF, BlackRock and all the other companies are going to go to Coinbase, who has been charged as, in a good way, when I say charged, they've been put in as the custodian for all of this cryptocurrency. So they're going to go then to Coinbase and say, please buy us $10 worth of Bitcoin and keep it safe for us. So every time $1 or $100 or $1 million goes into this ETF, which will be approved, I'm 90% sure, 99% sure, Coinbase is going to get that transaction, which of course will mean that their transaction fees are going to be absolutely massive. They're going to dwarf what this consumer net transaction revenue is going to be. So this is going to shoot through the roof. There are some reports saying that upwards of maybe 200 billion US dollars will go into Bitcoin ETF investments, and that's a massive amount. What that's going to do to the price of Bitcoin is obviously increase it. So right now we're sitting at 37,800 US dollars for the price of Bitcoin. And once this ETF gets released, this is going to be an investment opportunity, I believe, not only in Coinbase, but in Bitcoin, because the price is just going to go through the roof. So even if you don't like Bitcoin as a product, you say, look, I don't understand it, it's not for me, this is an investment opportunity I believe that exists out there. That's obviously do your own research. But the writing is on the wall when you have a company like BlackRock, who I don't particularly like. I think maybe an entry of companies like that in Wall Street into the crypto space is a bad thing. But ultimately, it's just going to bring billions and billions of dollars into this space. And investors are going to get exposure to Bitcoin through these ETFs instead of having to own the actual physical Bitcoin. Right now, In the US, all that exists is futures ETFs. So basically gambling on the price of where you think Bitcoin will go in the future. And there's been a lot of backlash to the SEC because they have been denying this ETF for a long time. And even what's crazy about it is the U.S. Congress wrote a letter to the SEC. I've seen the letter. I had it pulled up. Let me see if I can find it for you. It's very, very, very interesting. Hang on. I got to show you this. Oh, hold on. I have this letter. It's great. It's absolutely a great letter. This is how I know this is going to get approved. You don't often get a chance to see things like this. Wait a second. Give me a second. Where is it? Bear with me, because this is important. This is the letter. This is great. Okay. This is a letter that the Congress wrote from DC to Gary Gensler, who's the chair of the SEC. I don't know if you can see it, but it's basically saying, we write to ensure that the SEC does not continue to discriminate against spot Bitcoin exchange-traded products. So that would be BlackRock's ETF. The SEC is responsible for making certain that products that comply with an investor protection standards are made available to investors. This position was affirmed by the U.S. Court of Appeals for the District of Columbia last month in Grayscale. So Grayscale actually sued the SEC, and they won. They were saying that the SEC had violated the Administrative Procedures Act when it denied Grayscale's application for an ETF. And it goes on to say, during your time at the SEC, you consistently stated that digital asset firms should come in and register with the SEC. Market participants have relied on your statements, have filed applications for a regulated spot Bitcoin ETF. Following the Court of Appeals decision, there is no reason to continue to deny such applications under inconsistent and discriminatory standards. A regulated spot Bitcoin ETF would provide increased protection for investors by making access to Bitcoin safer and more transparent. Congress has a duty to assure that the SEC approves investment products that meet the requirements set out by Congress. To that end, we urge you to approve the ETF. That's a big letter. I mean, this is a letter that came from Congress straight to Gary Gensler. He is under immense pressure, hence these meetings with these massive financial companies getting together and saying, it's time for you to approve this ETF. Let's work together to get it done. Whatever it is that the SEC is not happy about, let's fix it. Let's get this ETF approved. And, that's one of the reasons why I am going to add to the trading 212 position, because I think Coinbase, which now after what happened to Binance, Binance has had its wrist slapped for not doing things right with anti-money laundering. So now they've gotten into trouble, and the CEO of Binance had to resign. You look at this. Binance uses to pull more than $1 billion from the exchange after the CEO leaves and pleads guilty. They were charged with violating the Bank Secrecy Act by failing to implement an effective AML laundering program for fully violating U.S. economic sanctions. Binance has forfeited $2.5 billion to the government, paid a fine of $1.8 billion. So that's a very, very large penalty, and the CEO's gotten his wrist slapped. He got a $50 million fine. So there's just not that many legitimate places anymore to even buy Bitcoin. It's kind of like the peer-to-peer lending market. It had this washout over the last 3 years of the bad companies. One of the problems with cryptocurrency is just not regulated, so we're having these issues. And now you're seeing this massive washout, and Binance now seems to really have gotten hit in a very negative way by what's happened. And Coinbase is going to be the one that really benefits because they are legitimate. They will become embed with the biggest financial companies in the world, and there'll be more regulation. It will become more legitimate, and then that is when you will see the Bitcoin price really begin to take off north, and I would say go parabolic. Same with Ethereum. So BlackRock has filed an application for the Ethereum ETF. So after the Bitcoin one follows, then the Ethereum one will follow. When you look at the price of Ethereum, of course, come down a little bit from its high, but you've just continued to really see it climb from its low stages down here. This is when we saw things were not great, and back in the October crash has gone all the way from 1400 up to 2000. So you can't ignore, the fact that this is starting to become a place that will be legitimized once these ETFs become approved by the SEC. And that is going to happen. I just don't see this not happening at that point. So you heard it here first. Get ready. This is going to be an interesting 2024 for Bitcoin and for some of the other, coins out there. I'm not a big fan of all the other stuff that exists out there. I think Bitcoin is the safest one of them all, but I continue to accumulate, and I have been for many, many years. And for better or for worse, I think this is going to be a very legit place to park money in the future, and even now. But come to your own conclusions with that. We will see what happens. I'm predicting 2025, 37,000 up to six figures, about 125 to 140,000 US dollars. So possible to quite easily 5x money at that point. Let's see if there is any other interesting news that I forgot. Oh, this is interesting. So a lot of the big investment companies are doing direct lending now. So instead of things like brokers being involved as middlemen, they are going direct to the people that need money. People like Blackstone, right? That is pretty interesting because it can really affect the peer-to-peer lending market too in a good way, because it shows that getting rid of certain barriers to entry when it comes to lending is really preferred. And some of these big companies now, you're talking about $333 billion, right? Private credit managers deploying to lending. So we're not talking about banks, we're talking about other forms of investment companies that are just doing direct lending now. I really feel it in my heart, and it may not happen next year, but I think as a direct result of things like that, the peer-to-peer business is going to become more legitimized too, with this direct lending model of peer-to-peer lenders lending direct to the people that need the money through the peer-to-peer companies. So the investment giants like the peer-to-peer companies in certain ways, that they are going direct now to the borrowers instead of lending money to the banks that then goes to the borrowers. So I thought that was a pretty interesting news story. Let's see what else. I think that really was about it. Was it 2:50? Yeah, we can go for almost an hour. So anyway, I hope you enjoyed it this week. Please go ahead and leave a thumbs up. Leave a comment. Tell your friends and family about the stream so they can come in and learn more about the things that we talk about. And don't forget, next week we'll be back to our regular time, Thursday, 7:30 p.m. Hopefully the peer-to-peer lending gods will shine upon us, and Narendra will be here, is confirmed to be here. Next Thursday, 7:30 p.m. We'll have a one-on-one interview with him. We'll talk about everything to do with Cufflink, about why they decided to put that minimum investment level from where it was up to £500, which a lot of people didn't like. Hopefully he'll give us the answers in a transparent way, which I think he will. Come with your questions. And I see in your comments, people say, I'm not really comfortable with crypto. Think about an ETF. You're not comfortable owning cryptocurrency, but it's going to give you a way to put your feet in the water for very small amounts and small amounts of risk. So if you want to get 10 pounds worth, 20 pounds worth, 100 pounds worth, you're going to be able to do that now in an ETF, which is extremely liquid. You're going to be able to sell and buy just like you can a stock. And that's going to give you exposure to the Bitcoin price. It's really as a way of exposing, making sure that you have diversification, because I can tell you this, money is a bad place to keep. What am I saying? Fiat money is getting eroded. You've seen it happen. There is no stopping it. It's going to continue. You keep money in a savings account, it's going to get eroded by inflation. There are better ways out there. The guy who invented Bitcoin figured it out. So anyway, a bit quiet on the peer-to-peer news front, but again, we'll be back Thursday. Cufflink, come check out the stream and bring your questions for Narinda. I'll see you next week. I don't know if let's see if you have any interesting comments. Oh, I should probably say hi to people. I forgot to do that today. Let's see who we got here. Patty. Patty's in France. We got Annabelle from Spain. Norman. P, of course. Welcome. No sound, I understand. Lionfish from Grand Cayman. Must get out of the pool. It's making me jealous. Who else? Paul Bagworth is here. Good to see you, Paul. Peter Vince from Leatherhead. Dave Dawson, Alan Stratford. Paul New saying the HSBC website is down. Is that right? Let's see. Maybe they got hacked. Let's have a look. HSBC. We're really sorry if you've been impacted by the disruption. We're working hard to fix it. Yeah, so obviously they got some tech issues over there at HSBC. It happens. Dave Dawson does not rate Rivian compared to Tesla. Well, my opinion is it really comes down to price and where you think you can get growth on a stock price. Can you get more growth in a Tesla stock price or Rivian stock price? I think the Rivian stock price is it's not correct where it should be. So I think there's some possibility for growth there versus what you're going to get in Tesla. Stephen Hale, welcome back from your holidays. Hello, everybody. And comments about not feeling comfortable with crypto. Yes, understood. You should always do what you're comfortable with. If you don't understand it, research it, read it, learn about it, and then make a decision or not. It's completely up to you. Anyways, I'm going to get out of here. Thank you for joining. Again, love each and every one of you. We'll see you back next Thursday, 7:30 p.m. for Narinda. Have a wonderful weekend. Enjoy it. Hopefully the weather's good to you. That's all I got for you. Take care. Bye.